guys, welcome to Sandra's Accounting channel. Today's episode will be discussing debit and credit. Hope you like it. Hi, before studying what debit and credit is, let's remove any misconception you have regarding to debit and credit. Some people have a misconception about debit and credit where debit may be good or credit may be bad. Debit and credit are neither good nor bad. Besides, debit and credit do not represent plus nor minus. It is not like plus equal to debit, minus equal to credit. So in order to learn debit and credit, you must remove all of this misconception first. So why accounting is using debit and credit? Because it is being used to reflect the double-sided nature of all financial transactions. As you can see, when the business have financial transaction, the accountant or the bookkeeper have to take the transaction into account. For example, in April 5th, when there is a transaction regarding to paying for supplies expenses of $200, the bookkeeper will record this transaction by debiting the supply expenses and crediting the cash. So how should we decide which account to be debit and which account to be credit? Yep, different account type, different side. As we can see here, there are 4 columns which are account type, normal balance, increased by and decreased by. Normal balance here refer to the side of an account under neutral circumstances. In a simple word, it refers to normally the side of the account. So from this table, we can see that assets, expenses, dividends, drawings, and losses, they have a normal balance on debit side. And liabilities, capital, revenue, gains, and income, they have a normal balance on the credit side. As you can see from the table, the increasing side of the accounts is actually equal to the normal balance. For example, to increase the assets account, you need to debit, or to increase the revenue account, you need to credit. Do you know why accountants record the financial transaction? Because accountants consider every transaction to involve a flow of economic benefits from a source to a destination. Economic benefit here refer to the potential for an asset to contribute either directly or indirectly to the flow of an entity's cash. In a simple word, the accountants want to know where your money from and where the money goes. In order to simplify the recording process, accountant will be using the debit and credit to record the financial transactions. Debit represent the destination and credit represent the source. One more thing, debit is on the left and credit is on the right. Source means where the money come from. So usually money can come from the owner, from third party where you borrow money, then it will be the liabilities. Money can come from your sales or the income. Where the money goes, meaning that where you use the money, so it will be the destination of the spending of your money. You might spend the money in buying assets like car, premises, land, inventory, or you can spend it on the other expenses like the operating expenses, on rental, purchasing inventory, or draw out by the owner. In order to make you easily remember where to debit or where to credit, I have come up with this PIT lines. So, PIT for debit and lines for credit. Alright, P refer to purchases, E refer to expenses, A refer to assets, and D refer to drawings. When this account increase, you need to debit. On the other hand, L represent liabilities, I is income, E is equity, and S is sales. To increase this account, you need to credit. Alright, let's make a quick recap about the lesson we have learned today. Number 1. Debit and credit do not represent bad nor good. Number 2. Debit and credit does not represent plus and minus. Number 3. Debit and credit is used to record the double entry of all financial transactions. Last but not least, the pit lies. Remember the pit lies? Pit represent the debit side and lies represent the credit side.
看完了吗？如果觉得不错的话，请记得帮我给一个 like、share 和 subscribe 哦。我有一个新的 YouTube 频道，我们下一集再见，拜拜。